Good afternoon, everybody. Welcome here to Wednesday's daily market update, Wednesday, 24th of June 2020. You're all very welcome. Hope you're well. I hope you're enjoying this fabulous weather that we certainly have here in the northwest. As always, if you're joining us for the first time, this is just a quick 20-odd minute sprint through what's been going on in the markets over the last 24 hours, just looking at a couple of stocks and maybe sectors that are of interest, and having a look at the major indices, FX, and commodities pairs. And you're all very welcome. But just remember, all information provided is for education purposes only. Trading on margin carries a high level of risk, and you should be aware of all the risks associated with margin trading. So where did I think we'd start today? Well, this is BT, okay, and it's the daily chart, and I was kind of intrigued to have a look at these because I was looking at reading some of the news headlines and talking about how people's internet usage has not unsurprisingly gone through the roof during lockdown, which shouldn't really be any surprise, should it really? People are doing much more online work. People are doing Zoom calls. People are doing all sorts. Okay, their kids are being schooled. The kids are having to entertain themselves. So not unsurprisingly, there has been a absolute huge jump in terms of kind of internet usage. Not really surprising. So I was kind of intrigued to look at, well, if you look at the one or two of the companies who are providing this and are supposed to be the backbone of it, surely this would be good for them. But as you can see from BT's chart there, who provide the one element of the major kind of infrastructure provider on both a business and a to the consumer level, you'd think that that would be good for them. But as you can see, not so much. So it's a case of 20 years ago, I worked in early internet communications, telco internet communications, and of course everyone thought that it was that the sort of kind of the big infrastructure guys were going to be like the guys who were selling the sort of shovels during the gold rush in America in the late 19th century. But the reality is that hasn't kept pace. That's not been the case. If you look at the big major companies providing internet, the shares haven't exactly sort of caught the imagination, and it's certainly clear here with BT. I mean, you can see for yourself, they've already been in a downtrend, right? Before this had even happened, okay? Up there at £2.30 before kind of a recent high at just under £2.10, dropping down to, and here we have, the kind of the pound mark. And we did have a little bit of a dead cat bounce, but we kind of drifted our way down there. Okay, as always, I apologise for my woeful artistry, but you get the message, don't you? You understand? And we came down and tapped a pound. Okay, bounced off there and come back, but actually we're sort of just kind of drifting down there. Okay, it's not exactly really setting the world alight here, is it, BT? So I mean, and BT are they're not a company that you expect to set the world alight. Okay, they are a bit of a staid utility. Nevertheless, you'd be interested to hope to see, with all this kind of additional internet usage, BT don't seem to be able to sort of benefit from that in their own ways. So, yeah, some people will love these because they probably pay good dividend and stuff, and they maybe as a long-term play, people might think, well, I'll buy at £1, it'll go back to £2 eventually because it's BT. But if you're a momentum trader there at the moment, there's nothing really there to get you excited. So, there's BT, an infrastructure company, okay, that is, not really having, any kind of real love from the markets. Whereas if we look at one of the perennial lockdown favorites, Zoom, okay, here we are, ZM, who we've looked at right from the very start, back here in March, okay, back here in the sort of in March time, okay, we were looking at these guys, okay, talking about how they're fired up through February, and they were doing really well out of lockdown. And boy, yeah, have they done really well out of lockdown? So they only opened at like about $60, okay, not too long ago, all right, only kind of just over a year or so ago, and had pitted up to about just over $100, and then came back down to that 60 area, and bosh. COVID and lockdown has been fantastic for Zoom. Yep, they've had some challenges and issues with regards to security and the ownership, etc. But we've looked at these guys a few times, okay, and as we said, you can see that there's just basically higher lows all the way, and then we got to we're up here talking about 180, and you can see they've just blown through 180, blown through 200, tried to came up, came back and retested 200, and this week, okay, they have been, hitting 250. All right, so whereas you can see that BT can't claim a break, all right, on all this internet usage, it's clear to see that it's boding well for Zoom. So if you bought them early on in the doors, okay, as part of it, all right, recognizing their value to us all, well done to you. Okay, that's been quite some move that they've had there, and it's going a little parabolic for my liking. But the question is that, yes, economies are reopening. Yes, people are returning back to work. But I think, the truth is, Zoom and video communications are here to stay. Certainly I'd say for the next year or so, people are going to be thinking, should I do that business trip, or should we just do it over Zoom? All right, and I think that's what will carry the day for them. So so well done to Zoom. Talking of companies who've done well, or reasons that have done well, so we were looking at Premier Foods, who we have talked about here in the past. Okay, we talked about them back, I think, about April, May time, talking about Premier Foods doing well. And I was reading this morning that basically people have been buying Mr. Kipling's cakes and wine, which sounds like people that's their own kind of self-therapy for getting through lockdown. Red wine and a French fancy. Fair play to you. There are worse ways you could be getting your way through this, but it's kind of whatever floats your boat. We will have to find our ways to get through it. And there are, as I say, there are worse ways than a fruit slice and a nice glass of red. But you can see Premier Foods, they also own. All right, I had a look at these because I'm not an equity specialist. They also own Lloyd Grossman's pasta. Okay, Bisto, Oxo Gravy, Sharwood's, okay, who make curry condiments, etc. And interestingly, they said that as people have been cooking more, of course, during lockdown, is that they have their range has lots of elements of things like Bisto, Oxo, Sharwood's, etc., pasta sauces. So that people have been buying more of them to add to the foods. So as you can see from Premier, they have done really well. All right, they've done really well. They were, I think, about 30 when we looked at them. Okay, and they've doubled up. They've gone 64, 60, up to sort of 65 pence there and stuff. So it's been a real thing. And as Mike says, that is an exceedingly nice chart. Nice tip top there, Mike. Well done. He gets gold star for a pun of the day. Well done. So and I'm sure if you bought this at 30, you can now this evening sit back and relax. And I'm sure that Mr. Kipling's apple pie will taste even sweeter if you bought these guys down at 27.30p. So well done to them. You can see for themselves. You can see for yourself there, can't you? It's a case of they're kind of a little bit of a 1, 2, 3 there, right? Okay, popped up, even gapped up. Okay, got above 40. Once it got above the recent highs, you can see yourself. All right, it was just basically consolidating there, wasn't it? Went sideways for what was that? For about 6 weeks. Went sideways, broke it, okay, came back, retested it, and it's not looked back since, has it? Really, it's just it's done fantastically well. So, it's great to see companies, with all this despair that we hear and stuff from the media. It's great to see companies have done well out of it and stuff, and fair play to them. So, so Premier Foods, and the other one was Naked Wines. Okay, they have done very well now. I have to admit that I didn't even know Naked Wines were a listed company. Okay, and I wish I had. Even I can't keep on top of everything. All right, because if I had, well, then it would have made sense to have to buy shares in these guys and stuff, because invariably they're just, I think, an online operator. I get lots of adverts for them, all both through my letterbox or electronically. And offering some actually quite seems like quite good deals to get you in, and clearly it's worked for them. All right, clearly it has worked for them. All right, so looking at that, it's not really, let's say pre-COVID, not necessarily the most kind of exciting of a chart, holding up above £2, okay, in a kind of a bit of a range between £2 and £3. You'd be saying, but boy, all right, okay, mid-April, people have had about a month. People have had about a month of lockdown. Everyone's fed up now. All right, we're all fed up. So reach for that glass of Chardonnay. Okay, as you're doing your again daily 3 o'clock office Zoom call, You put your Chardonnay in there, say it's peppermint tea, and away you go. I'm not in any way suggesting that you would be doing that. Okay, I'm sure you're all utter professionals once you're working, but clearly it hasn't done Naked Wines any harm. And so, from kind of lows there at £2, they've doubled up to 4.40. They've come back a bit, all right, but the kind of news out was very good this morning and stuff, and so they will continue to as Mike says, that might explain my drawing. Yeah, you've caught me, Mike. You've caught me. Okay, it's the game is up. So I wish my life was that exciting, but it's a case of they've they had a bit of a roll off at the top there. Okay, and but you'll be looking at on those numbers, kind of get back up above 4. All right, I'd say this was a bluebird momentum play. All right, okay, it just came out of nowhere. Bosch, and is it going to maintain it? That would be the good question, isn't it? Will people still keep buying? Have Naked Wines accumulated enough new clients who are happy that will continue putting good revenues through, or will people still want to go back to the people want to be like Mike in the queue at Bargain Booze, getting their scraping the barrel for a £3 Temperillo. That's the big kind of challenge that we're look for. So and Aruna says that's where I'm going wrong, though I was supposed to be sober when trading. Being sober when trading is normally the best way to be truthful. But at the end of the day, well, you can reflect upon your trading performance with in however way you wish. You might want to get out on the bike for 20 miles. You might want to pop the cork. It's you'll all find your own way of working with that. So there you go. Naked Wines there, and talking of kind of managing your trading performance. So next Thursday is the Q3 webinar for the New Year New Trader program. All right, there's 4 webinars this year. Part of that. The one in January was on money management. The one at the start of April was on markets. This one next Thursday is on methods. Okay, different types of trading methods. I'll share a few with you. And then the final one for the year is at start of October, Q4, and that's on managing myself. Okay, it's the cost is £30 for the 4 webinars over the year. So if you want to join us, you can see the link there. Okay, that you can do it, or just drop me a note. If you're joining us, you'll get access to the previous 2. They were recorded. Okay, so you'll have access to them to basically to go through them. So Aruna says excellent value for money for anyone who hasn't joined. That's great. Thank you. Appreciate that, Aruna and stuff. So if you want to join us next Thursday, or if you want access to those webinars to watch in the comfort of your own home with a glass of wine and a Mr. Kipling's cake, then by all means, just ping me there, okay, and we can add you to that. So there's some of the stocks and sectors. Let's have a little look at the markets to finish us up there. As always, I say, if there's something you want me to have a look at, or if you're interested in, give me a shout. I don't mind at all. Okay, I think it all kind of adds to the interest. All right, makes it more interesting for everybody. So here we go. Here we are. This is US indices. All right, so Dow, Russell, S&P 500. NASDAQ. Okay, so I had a little trade on the NASDAQ last night, which we'll talk about, but just look at the Dow here and the daily chart. It's a bit of this is a 4-hour chart, remember, so this is this week. Okay, so which is just basically still within the range of last week. Okay, still within the range of last week. All right, last week it popped out at the start of the week, came back in, and it's just doing that. And to me, if I go up to the daily chart, I look at that. Okay, all right. Is this price coiling up here? Okay, what we've seen over the last couple of days is a case of people's fears and worries about the US-China trade deal. 1 hour it's on, 1 hour it's off. Also the kind of resurgence of numbers, okay, so coming out certainly in the US, but also out of we've seen in terms of in Germany, in Korea, and in China. China's wanting to fight everybody at the moment, so the Chinese and the Indians are having a bit of handbags at dawn. Okay, the sort of Chinese are picking a fight with the Americans. Okay, of the trade deal. They're also having a bit of a scrap with the Australians. Okay. So there's yeah, all of that adds to kind of nervousness and uncertainty, and you know, and people get a little bit spooked, and that might explain why, you know, we're just kind of going very, very quiet there. Okay, on those indices, it's a case of, you know, people waiting for the next news. There's nothing really major coming out today. We had, I think, some Kiwi news earlier this morning, but you know, historically, what you're looking at is that's a continuation pattern. Okay, let's just get the drawing. Continue. You know, that's a continuation pattern. So you would expect for price to break out of that and go to the north side. Okay, and perhaps return to these previous highs, and that's perfectly possible. In this particular moment, anything is perfectly possible, and alternatively, it could roll over and just drop again, and that will be, personally, I think that will be off geopolitical news. All right, if there's some bad news that comes out from, you know, somewhere, you know, America, whatever, that will drop that. Okay, but if the news abates, then I suspect we'll just see, you know, more people just waiting to go long for the next leg up. And you know, and that's it. If you look at the Russell, okay, Russell's not dissimilar, okay, in that sense. All right, it's just kind of the 4-hour chart there. It's just, yeah, it's just coiling up a bit, okay. It's just, you know, it's within the range of the previous week. S&P 500, okay, is kind of the same. It's sort of gapped out of it, but it's just, yeah, it's just kind of in that kind of block there, really. I'd be saying, you know, at the moment, okay, you're looking at between about, what's that, about 3140 and 360, 3060, 3140. Okay, so about an 80 handle block there. Okay, for the last few days, really. So you just look and see, is it's gonna hold, and that, or is there going to be something else that brings us out to get us off the sideboard, off the sidelines rather. Nasdaq, you know, whereas the others have been a bit, what's the word? You know, they've been a bit moribund. Nasdaq, you can see, and we talked about it the other day, this week has pushed to new all-time highs. Okay, it's actually pushed to that. It's holding above 10,000. It's you know, it's just, all it's doing is just effectively is you know, reiterating the story I've been saying for the last couple of months, that basically the money's flooding into big, you know, US tech companies on the, you know, on the Nasdaq, and that's dragging everything forward. Last night, okay, I had a kind of a bit of a short there, okay, on the Nasdaq as it rallied up, and then it looked to roll over. But you know, I was out. You know, I was kind of out much quicker, and then you can see overnight it's actually dropped down a further. But it was just a kind of at end of the day whilst I was sat at my desk watching it sort of just sort of kind of fly up and then roll over and fall away. So yeah, so at the moment I'd say it's still a little bit of nervousness, and a lot of that will come out of, you know, what comes out of the US in terms of COVID numbers, and also with the US-China trade talks. There's no formal news this afternoon, but so it could be a quiet day. You know, we shall have to wait and see. That has all had an impact on European indices as well. So that just comes up here. So they kind of had a bit of a kind of, I'll start with the DAX 1 hour chart here. Okay, having popped up there yesterday, what we were talking about this morning, it's just kind of gone sideways, and then we can see it's collapsed. All right, we've collapsed there back down to the 200 period moving average there. It was kind of not a bit of a kind of, yeah, a bit of a breakout there if you like trading breakouts of blocks. Okay, that's what we saw there on the 15-minute chart. All right, and it's just, as I said, I think the last few days, as long as the DAX stays above 200, you'd be mostly bullish. All right, it's if it gets beneath, it starts closing, that you'd be thinking, right, well, then it's going to drift down to the 50. The FTSE, all right, FTSE has done the same, really, having popped up a bit higher. Yes, this is the 1 hour chart, kind of rolled over this morning. Okay, we had this is a bit of a squeeze there between the 50 and the 20, squeezed it, and then bosh, we just dropped again, and a little bit like the, I mean, it's kind of nicer for me. This is the 15-minute chart on the FTSE. I don't really trade the FTSE that much. Okay, I prefer, you know, trade indices, and I prefer the DAX, but occasionally some things set up here. And what we had here is you had the 200 period moving average, okay, giving you sort of dynamic support there, but on the other side you had the 50 providing, okay, dynamic resistance. It was squeezing it down. All right, so you're effectively getting squeezed, a kind of a descending triangle, and then you can see what happens is, okay, it breaks, and it breaks and it tanks there. Okay, so you know, that's when This is when things like moving averages come in useful for me, right? When I see them squeezing the price, okay, the squeezing the price, it's kind of like getting ready to sort of blow its lid, and that's what we see there, and that's what we're that's one of the reasons I kind of like moving averages when I see like that. When I see that it's actually respecting that, okay, and I can see the moving averages are in charge there, okay. That's kind of, I know it's sort of setting up to get ready to move. So yeah, and the rest of the European indices have been pretty much the same, pretty much the similar. If we switch across to FX, then to finish it off, this is the Kiwi dollar. So Kiwi dollar's been quite strong recently. If you see me look at it on the stand, but if we look at it, this is the Kiwi dollar profile on the 4-hour chart. It's been it's not been a great week for Kiwi dollar. So the Kiwi dollar had I think it's the Royal Bank of New Zealand had its meeting yesterday. They've held interest rates, okay, but they commented that they were a little bit concerned about the increasing strength in the Kiwi dollar, because of course that has an impact on them exporting milk and dairy products, and that they may actually look to intervene or ease markets, ease the flows, just to basically help their help the Kiwi. And of course that's had an impact there of night. This, as I said, it's a 4-hour chart, so this is Kiwi against US dollar, euro against the Kiwi, pound against the Kiwi, New Zealand dollar against the Swiss franc, Kiwi against the Japanese yen, Aussie against the Kiwi, Kiwi against the CAD. And you can see that actually those 4-hour charts over the last 24 hours, the Kiwi's really weakened, okay, off the back of that sentiment. It's really, it's really thing. Even Kiwi CAD, which has been a bit dull, all right? Kiwi CAD, which has been remarkably dull for a couple of weeks, all right? We're just looking at that there. Okay, we talked about it. It's just popped up there, okay, double topped out of it, and then just collapsed all the way back down into it overnight. Okay, that's what it did. Nice double top there, and kind of just dropped its way and continued. It's almost down by the other side of the side of the element, and that's what you're just seeing across the board. Okay, so 4-hour chart, Kiwi dollar, great, a month's great run there. Okay. And then it double topped there, putting a pattern there, M pattern there, okay. And it's kind of rolled off, tried to get up, can't get back to those highs, and then you can see it's basically over the last 24 hours, okay. It's rolled over back beneath the 50 there, right? So I would expect a bit more weakness back down to around about the kind of 64 area. I'd be reckoning that's where Kiwi dollar will go. And if you look at the dollar in general, let's have a look here. If you remember what I was talking about yesterday, is that 4-hour chart here on the dollar index. I was saying yesterday that the price had broken the 20, broken the 50, and I said it really needs to make sure it can stay above this kind of recent low here. And interestingly, yesterday, okay, overnight, it traded down to that low. It didn't close beneath it, and it's bounced off it there. So I'll be looking to see what that does this afternoon. All right, we've had that's just a little drift north, okay, for the Dixie. All right, so I'll be interested to see, is it going to drift even further north up to about 97, back up to where that 20 and 50 is, or is this just going to drift up before it slams its way back down towards it? So I still think keeping above that kind of low is kind of important if there's any kind of still sort of bullish, longer term bullish momentum. But we shall find that out. A quick way to look at that is the euro against the Kiwi dollar single currency. Done the same, okay. It as I said yesterday, it needed to sort of stay beneath these kind of beneath these highs. It came up, tapped it, and it's rolled off there. And now we're looking to see, is it going to drift its way back down, okay, into around that 1250 area, or will it try and reassault that and then go for the highs again? I'd be looking at that this afternoon to see what kind of the market decides to do. We've already looked at Kiwi dollar. Dollar again is just boring at the moment. Aussie against Kiwi dollar is not really doing anything terribly different from the Kiwi dollar. So let's quickly finish off on sterling like normal. And sterling's a bit mixed picture, a bit messy, a bit mixed. Cable, all right. Cable is going through its grand old Duke of York bit, all right, okay, marched its way up to the top of the hill and marched its way back down, and we've had a little bounce that in the last day or so, all right, and it's it's kind of, it's drifting its way up there, okay. But you've got to look at, is this just performing legs down, or are we getting ready here for the next leg down? If I'm honest, I don't really know. The price action isn't exactly selling itself to me at the moment. There's nothing there really that's getting me terribly excited. So I'll just be watching that for the rest of the day to see what happens there. Euro sterling, okay, has just come off its highs. The 4-hour chart pushed to highs there, and it's just fallen away from that, okay. In the hourly chart, having tried to push to new highs, all right, it fell down, okay. It fell down, and this morning it's continued, and it's really 90-20, the area there, okay. 90-20, and then you got to look at, could it just slump its way back down to 90 there? That's what I'd be looking for. I think I could be wrong. I think there's an EU meeting on Friday, but I could be wrong on that. And maybe that is what maybe that's what everybody's waiting for. Even pound against yen, the 4-hour chart, which had been some really nice downtrends, okay, in the 4-hour chart over the last couple of weeks, rallied up off there, and actually you can see, I'll be looking at that sort of today. Is just nobody's really interested, all right. It's the weather's nice, okay. It's middle of the week, that's price coiling up, and it's going to wait to see what it wants to do. So there we go, ladies and gentlemen. Quick flash through as always. So I hope you found that useful. I hope it helps you this afternoon. Okay, as always, make sure you're managing risk, and I wish you the best of success with your own trading. And we'll be back here tomorrow for same time, same place. Okay, for more of that said, if there's something you want me to have a look at, give me a shout. If you want to join the sort of New Year New Trader webinar program for next Thursday, then you can drop me a note as well, and we'll make that happen. And failing that, I'll see you tomorrow. Trade well, everyone. Cheers.